Right, how's it, guys? We're going to be looking at expense adjustments in this little video. Just to start off with, these adjustments here to expenses, remember we are dealing with the matching principle, so we are matching our expenses for that 12-month financial period. Okay. There are two examples here of the adjustments that we'll be making. The one example is when we have a prepaid expense. Okay, that means we've paid too much for a particular expense in that 12-month period. And then we have what we refer to as an accrued expense. And that is an expense that we haven't paid enough on yet. And we need to add to that expense for that financial period. All right, so what we'll do is we'll go through task 10.13 and then use this task to help explain these new expense adjustments to you. Before we do that, just remember, again, it's important that you identify that a prepaid expense is an asset, okay, so they are debited, and then an accrued expense is a liability. So if the accrued expense needs to increase, they will be credited. Right, so if we just look at these adjustments to expenses, before we look at task 10.13, I'm going to just do a little bit of an illustration for you guys on that 12-month period, and then also just having a look at using that matching principle and matching those expenses to that financial year. Okay, just to start off with, this is an example of an accrued expense. So the accrued expense would mean that you need to add to that expense for that financial period. So that financial period, remember, is again 12 months. So if we need to add to that expense, the actual expense account needs to be debited, and then you'll see the actual accrued expense, which is a liability, must be credited. So that would be dealing with an accrued expense when we're adding to that expense. An accrued expense is also referred to as expenses payable. And then if we look at the opposite here, is a prepaid expense. Here you can see that we've paid too much for this particular expense. So you can see that the amount that we've paid, it also includes amounts from the next financial period. So you can see that we now need to reduce. So we need to deduct that expense for the financial period. And that's what you'll see will happen is the actual expense account must be credited. Expense being credited is reducing the expense, and then the asset account, prepaid expenses account, that will then be debited. So that's just a nice little illustration there of these two adjustments that we'll be dealing with now in task 10.13. In 10.13, guys, the financial year, again, has been given to us. It's important that when we do our timeline, that we know the financial year is from the 1st of March 20.2 right through to the 28th of February 20.3. They give us a pre-adjustment trial balance here. So there's figures that are given to us. In the pre-adjustment trial balance, they tell us that the loan amount amounts to 80,000 Rand. Insurance is 15,670, stationery, and the rest of the amounts are given to us. Okay, what we're going to do now is we're going to just go through these adjustments. I'm going to pull them apart a little bit, and then we'll go into illustrating it for you guys to get through the actual exercise. Okay, just to start off with, we have insurance, which includes a new insurance contract of 5,310 Rand, which expires on the 30th of June. This is an annual insurance contract, so there are two insurance contracts that this business has. Okay, this additional contract is taken out for a full 12 months and it expires on the 30th of June 20.3. So you can see that this annual contract insurance here, this new insurance contract, is actually taken out on the 1st of July. Okay, 20.2, and it now must go through to the next financial year right until the 30th of June 20.3. So you will see that the actual total insurance amount here of 15,670 Rand for this particular period is actually too much. So we actually have to deduct a portion of that insurance for this current financial period. So if we just have a look at this, this would refer to a prepaid expense. So we've actually paid too much on insurance, and that asset obviously needs to be recorded. So you'll see here the 5,310 Rand for insurance is an annual premium, which expires on the 30th of June. As the financial period ends in February, 4 months are prepaid. Okay, so you'll see now when we illustrate it exactly what that looks like. The vehicle here was serviced during February 20.3, so the account of 980 Rand has not yet been paid. So that 980 Rand needs to be added to the current amount there on vehicles expenses. So the 5,670 Rand for this particular financial year is not enough. We need to now actually add another 980 Rand to that vehicle expenses account. So if we just have a look at that, this would be an example of an accrued expense. So it's an expense that we need to be adding to. Okay, so the vehicle expenses have not been paid and are an expense for this year, so it needs to be included. So you'll see you'll be adding 980 Rand to that 5,670 Rand. We then have an amount here, we have an amount for stationery, 160 Rand for stationery was ordered for the next accounting period, but was paid for now in this current financial period. So that again is an example of a prepaid expense, and you can see what's happened is we are paying now for stationery that we're only going to use in the next year. So that's why we regard this as expenses prepaid or prepaid expense, and you can also refer to it as consumable stores on hand. Okay, and then finally, guys, we have here an adjustment entry for interest on loan. The loan was taken on the first day of the financial period, and they tell us here that the loan is charged to the loan account. In other words, it's been capitalized. So when you see the word capitalize, it means you have to add it directly to the actual loan account. So if you have a look here, if you work out what the interest is for this particular financial year, you times that 80,000 Rand by 60%, and you'll see your calculation for interest is going to be 12,800 Rand for the year. But we'll have a look at this transaction now as well. Okay, again, accounts involved, they're all expenses. And again, referring to expenses, we know that they all increase on the debit side. And if you reduce the expense, they need to be reduced on the credit side. So those are the expenses that we're going to be dealing with. If we look at insurance quickly, I know we've just spoken about it, but if we just look at it again, insurance, the amount is 15,670 Rand. Of that amount, 5,310 Rand was taken out from July, so that 10,360 Rand will be for the full 12 months, okay, for the full financial year, those 12 months. The second insurance contract, which was taken out in July, amounted to 5,310 Rand. That second contract insurance was taken out for a 12-month period, which goes beyond the current financial year. So you can see it actually goes right through until the 30th of June, 20.3. So you'll see what needs to happen is we need to deduct 4 months rent that was 4 months insurance that was paid needs to be deducted from this 5,310 Rand to again match this insurance expense to this current financial period. So we would need to deduct insurance by 1,770 Rand. How did we get that? If you take the 5,310 Rand divided by the 12 months, for that contract, it's 442 Rand 50 per month. And then you'll see by deducting it by 1,770 Rand, you'll see that the new adjusted amount for insurance for this particular financial year needs to be 3,900 Rand. So that's how I would have dealt with it. If we take this through to the actual expense account, you'll note that the expense needing to be credited because we're reducing the expense by 1,770 Rand. And then prepaid expense, which is the asset, must be increased by debiting that account. All right, so that's dealing with insurance. If we look at vehicle expenses, over here we had vehicle expenses amounting to 5,670 Rand for those 12 months. And they told us again that that final amount of vehicle expenses for that service, which was 980 Rand, had not yet been paid. That 980 Rand falls in the current financial period. So we would need to add to vehicle expenses. That 980 Rand must be added to that initial amount of 5,670 Rand. Okay, so again, the adjustment here is the expense needs to be increased, and then accrued expenses, the liability would need to be credited because that liability needs to be increased as well by that amount that was due for this particular financial period. Okay. Stationery here, we had an amount of 3,210 Rand. Okay, we thought that that 3,210 Rand was for the full 12 months, but it turns out that there was a portion of the stationery that was actually for the next financial period. So here we need to deduct 160 Rand from that 3,210 Rand. So you'll see the new adjusted amount of stationery is 3,050 Rand. So here the expense is being credited because we reduce the expense stationery, and then we debit prepaid expenses, which is that asset account that needs to be increasing on the debit side. Okay, so that's dealing with the stationery one. Interest on loan, guys. Yeah, the interest on loan worked out to 12,800 Rand. I'm going to show the calculation again. That interest is for the full 12 months, that's for the full financial year. Okay, if you have a look at it quickly, that interest on loan was, the actual loan amount was 80,000 Rand. So if we times that by the per annum rate of 16%, full 12 months, we get the 12,800 Rand. This 12,800 Rand, guys, is capitalized. In other words, what we've done here, it's added directly to the loan account. So that's quite important for you guys to see that as well. So the expense, interest on loan is debited, so the expense is increased, and then the actual loan account needs to be credited because we're increasing that loan account because it's been capitalized. So that 12,800 Rand would go to the loan account on the credit side. Right, so just summarizing it, guys, once we've dealt with the adjustment, we need to deal with it in the general journal. So that's our first step. Again, before we just look at that, an expense, remembering, get bigger on the debit side, they get smaller on the credit side. So if we have a look at here, if we just have a look at it again, insurance is being credited. Stationery is also being credited, meaning that those two accounts have been reduced. And then you'll see vehicle expenses has been debited, which means that that vehicle expenses account has been increased. Okay, and that's why the accrued expense is increasing vehicle expenses. And then, of course, that interest on loan account, it is now being recorded, so that interest is increasing, that expense is increasing on the debit side. Okay, if we look at the, once we've done the general journal, we then do the ledgers. If you look at the ledgers quickly in the order of the transactions that were given to us, the insurance, that amount was a prepaid expense, so that's why it was credited. Okay, so we reduced insurance by crediting the account. And then vehicle expenses, that 980 Rand, which was for that service that hadn't been recorded yet, has been added to vehicle expenses on the debit side. We then had stationery, which was that 160 Rand that was prepaid, that went into the next financial year. So that is reducing the stationery. And then obviously the interest on loan account there, that expense has now been recorded for the full year of 12,800 Rand. Okay, and that's been increased. If we look again, guys, at the corresponding debits or credits for these transactions, we'll notice there the loan from WEP Bank, the balance there was 80,000 Rand, and we've increased it now by 12,800 Rand because the amount's been capitalized. And then just reminding you guys that an accrued expense is a liability, so it goes on the credit side, so that's where the vehicle expenses has been included, and then the prepaid expenses is an asset to our business. When we pay for expenses in advance, it's an asset to us. So you'll see the debit entries there for the insurance and the stationery that were for the next financial period. Okay, and then finally, guys, we had the account debit and account credit, which I'm sure from the explanation you guys have had, you'll understand why they've been debited and credited, and then you've got the effect on the accounting equation. Okay, guys, so that's that task, 10.13.